everyone. Welcome to Sam's Summaries. This episode is a deep dive discussion into Sam Fury's summary of Chapter 8 from the book Crypto Swing Trading by Jai George. It has been created with the help of AI. The chapter is titled Trading Psychology. You can read the original post at samfury.com.
All right, so you ready to go deep on crypto swing trading today?
Always ready. Let's do it.
But with a bit of a twist. We're not just talking charts and patterns.
Yep.
This is about the mental game, the psychology of winning in the markets.
You got it.
We're diving deep into Chapter 8 of Jai George's book, Crypto Swing Trading,
Great book.
and really getting into why having the right mindset can actually be just as important as having those killer technical skills, you know?
Oh, absolutely. I mean, you can know all the indicators, the patterns, everything.
Right.
But if you can't handle the pressure, if you let your emotions get the best of you, well,
It all falls apart.
it does.
Yeah.
It really does. You've got to have that trader's mentality to succeed.
Okay, so our mission today is to figure out how to develop that mentality, that trader's mindset. And you know what? I think a lot of this stuff actually applies too, like life in general, not just trading.
Oh, for sure. We're talking about discipline, patience, emotional control. These are valuable skills no matter what you're doing.
All right, so let's get into it. So the source makes this point really clear. Like, obviously, you need technical skills to trade. You got to know what you're doing.
Right.
But George emphasizes those skills are only half the battle.
Only half.
It's mastering your emotions, being able to execute your strategies even when things get crazy.
Yeah.
That's what really sets those consistent winners apart from everyone else.
And he puts it so well in the book. He says, you could be the best technical trader in the world,
Right.
but if you can't control your emotions, you will probably fail. Straight up, no sugarcoating.
Powerful statement. I mean, we all know someone, right, who's super talented, super smart,
Yeah.
but they just can't seem to get out of their own way. They sabotage themselves with their emotions.
All the time. But the opposite is also true, which is really encouraging, right?
Yeah.
Someone with, like, average technical skills can still be really successful
If they've got that mental game down.
if they've mastered their psychology. And George actually says, even average traders can make money if they have a good command of their psychology. So it's not all about being a genius chart reader.
Love that. So how do we do it? How do we get that command of our psychology?
Well, the book points to two key traits, and you've already mentioned them. Discipline and patience.
The dynamic duo.
Right. Discipline is about sticking to your plan even when things get wild. And oh, they will get wild in the crypto markets, believe me.
Wild is an understatement.
And then patience. Patience is about knowing when to strike. Knowing that not every trade is a good trade.
It's like surfing.
Okay, I like this.
You can be an amazing paddler,
Yeah.
the best technique in the world, but if you don't have the patience to wait for that perfect wave,
Yeah,
you're just going to get wiped out, end up back on the beach.
exactly. And a big part of both discipline and patience is having a personalized trading strategy.
That written plan.
Yes. Not just in your head, actually written down. George says, create for yourself a checklist of indicators and patterns to look for and actions you will take. He also says, keep it simple.
So it's not just about like, I think I'll buy Bitcoin today. It's if the price breaks above this resistance level and the volume is strong,
Right.
then I will enter a trade.
Boom. And just to clarify for anyone new to this, resistance level is a price point where a stock, or in this case, a cryptocurrency, has historically had trouble moving higher.
Right, it's like a ceiling.
Yeah, a ceiling. And volume refers to the number of shares or coins that are being traded.
Lots of action. Having that plan, it keeps you from making those emotional, impulsive decisions in the moment, which can be so tempting.
Oh, especially when you see prices moving fast.
And maybe we should just like quickly touch on swing trading itself just to make sure everyone's on the same page.
Good idea.
So swing trading is all about holding positions for, a few days, maybe a few weeks, trying to capture those price swings in the market.
Exactly. It's different from day trading where you're getting in and out of trades much faster.
Way faster.
Yeah. And don't forget about risk management as part of your swing trading plan.
Huge.
Stop loss orders are absolutely crucial. These are orders that automatically sell your position if the price drops to a certain point that you set.
It's like your safety net. Keeps you from losing too much on a trade.
It prevents you from making emotional decisions in the heat of the moment, like, oh no, it's dropping, I gotta sell everything.
Panic selling.
Exactly. And setting profit targets is equally important. This helps you lock in those gains when your plan is working, prevents you from getting greedy and holding on too long.
So you're not sitting there watching your profits disappear because you thought it was going to go up forever.
Right. It's all about having a plan, like you said earlier, a recipe. You follow the steps.
Yeah, but sticking to that plan,
Yeah.
that's where things get really hard, right? Because we're human. We got emotions.
Oh, yeah.
And George talks about these emotional saboteurs that every trader has to deal with.
The big three: FOMO, greed, and fear.
Let's break them down.
Okay, so FOMO, the fear of missing out. This is what makes you jump into trades just because it seems like everyone else is making money.
You're seeing all those green candles on the charts, you know.
Right, and you're like, oh, I got to get in on this, even if it goes completely against your plan.
And then there's greed, that feeling of, I need more, even when you're already up on a trade.
Yeah, you get a little taste of profit, and suddenly you're thinking, this could go to the moon.
To the moon.
But then, boom, the price reverses, you hold on too long, and those profits vanish. And then fear, of course, the opposite of greed. This is what makes you sell at the first sign of any dip in price, even if it's totally normal.
A little wobble and you're out.
Out, even though that dip could have been a great buying opportunity or the price could have easily recovered.
And you know, these emotions, they don't just show up in trading. They're everywhere in life. Think about that time you bought something you didn't need just because it was on sale.
Impulse buy.
FOMO. And that's why having that plan, that strategy, and sticking to it is so crucial, whether you're trading or just navigating life's decisions.
Couldn't agree more.
Okay, so here's something I thought was super interesting. The book also emphasizes the importance of personal well-being for trading success.
At first glance, you might be like, what does that have to do with trading?
Yeah.
But it actually makes a lot of sense because a tired, stressed out mind, it's way more likely to make those impulsive, emotion-driven decisions that we were just talking about.
So getting enough sleep, eating healthy, exercising,
Meditation, yoga.
all that good stuff. It's not just about being healthy.
Right.
It's about being a better trader.
100%. George even suggests incorporating things like breathing exercises into your routine.
Oh, yeah.
There's one called the 4-7-8 breath. You breathe in for a count of 4, you hold your breath for a count of 7, and then you exhale slowly for a count of 8.
I've heard of that one. That's supposed to be really good for calming down your nervous system.
Exactly. It's all about being aware of your physical and mental state before you even think about making a trade.
So if you're feeling stressed, if you haven't slept well, maybe step away from the charts for a bit. Take care of yourself first.
Yeah, trading can wait.
It's not going anywhere. All right, so it feels like we've covered a lot today. We talked about the importance of discipline, patience, having a clear written plan,
Right.
understanding those emotional saboteurs, FOMO, greed, and fear.
The usual suspects.
But we also touched on something really important, something you don't always hear about in trading books, which is taking care of yourself, your well-being.
It's all connected. And, another way to think about trading, it's not just about making money, it's also a journey of self-discovery.
Ooh, I like that.
You're learning about the markets, yes, but you're also learning about yourself.
Your strengths, your weaknesses,
Yeah.
how you react under pressure.
Exactly. And those are skills that translate to all areas of life, not just trading.
So true. Okay, I've got one final thought for our listeners. Think back to a time when you made a really impulsive decision, a decision that you later regretted.
Ooh, good one.
What emotions were driving that decision? How might having a plan, a strategy, even for dealing with those emotions, have changed the outcome?
Something to ponder.
All right, until next time, happy trading and happy living, everyone.
See you next time.
Thanks for tuning in to Sam's Summaries. If you found this episode useful, let us know with a like, follow, and share. Also, if you haven't already, be sure to visit samfury.com to get free access to all of Sam's original summaries. You can also get any of Sam's books and other exclusive content. It's all completely free at samfury.com.